Welcome back to Golden Rule Radio, your weekly precious metals podcast. Miles, we're going to jump right into gold today. Kind of a flat week after multiple weeks of volatility across the board. Gold trading exactly where we were last week when you guys recorded.
Yeah, Eric, I appreciate that. And welcome back to the show this week. Thanks for joining me. Earlier in June, and we talked about this last week, gold pushing sub 1700. But you are correct. We did kick back up, and we're sitting around 1725 or so throughout the first part of this week with a little bit of up and down. Now, what we have seen, and we did point this out, I believe in last week's show, we've now seen two lower lows, both on the top and bottom of the channel, lower high and lower low, and gold is technically short-term trending downward since about the middle of May, although not doing it very aggressively. So with the summer months, something Robert pointed out 2 weeks ago, with these summer months, you tend to get into the summer market doldrums. People aren't thinking about investing. They're thinking about their kids being home from school, which I know is a little extended this year because everybody's kids have been home since March, possibly vacations, anything else. I mean, that's pretty traditional. I know 2020 is a very different year than what we're used to, but it's not surprising to see gold kind of just holding steady here. One thing I do want to point out is we actually have a shorter term expanding, so the opposite of a pennant, kind of a reverse triangle here, where the lows are declining faster than the highs. I don't necessarily think that means too much. I like compression personally better than expansion, so not quite sure what that means, but the longer term rising trend line is still holding. So it's very likely we'll just continue to see gold kick around here for the next month or so, probably no massive jump up or down until we get out of these summer months and we get back into a more investment-driven market.
Would you expect to see a drop below 1700 again in the short term?
Yeah, sure. Why not?
And you would call that a buying opportunity again?
Yeah, really anything all the way down to, I mean, even, technically you can even push sub 1600. You've got your 618 fib all the way down at like 1590. So you have a lot of downwards pressure that would still be very bullish in the market long term. Gold's just done so much in such a short period of time that you really do have a lot of wiggle room for volatility.
So Miles, as we move towards reopening the economy, obviously I'm back in the office for the first time in a few months, and you're seeing a lot more traffic up. You're seeing the economy on a global level get back to somewhat normal, or you'd hear the new normal. Silver's shown strength through this time, I'd say, and since the reopening, we've had even more strength in silver. Do you think that's related to its industrial use and the economy back and running, or is this purely a technical move from your opinion?
Well, I think we'll know better once we see those second quarter numbers, certainly, if we are seeing an actual increase in productivity anywhere. I know there's a lot of very warranted concern right now because of the unemployment rates and because of all that we've lost so far this year. On top of the secondary issue that we talk about all the time, which is just the rampant inflation that we're already experiencing, getting kicked into high gear. Not only did we have the overnight market, repo market issue last fall coming into coronavirus this spring, and a substantial amount of paper printed into the market. Those ramifications are going to pop up over the next 18 months. And on top of a 30% unemployment rate here in the U.S. right now, and a number of people filing those claims, that money's got to come from somewhere, and we don't have any. So there's only one solution. I mean, when all you have is a hammer, everything looks like a nail.
Mm-hmm. While we're on the topic of inflation, let me get your thoughts real quick, because you've been in the financial markets for going on 20 years now, which is a good amount of time. I listened to Jay Powell's comments over the last few days, and they're very far away from even thinking about raising interest rates, right?
But in the same breath, what did he say? It was
he's not.
We're not even thinking about it, which is great.
A few sentences later, even today, a week later, I heard him say that there's no concern for inflation right now. We're in a different time. Inflation's not something you have to worry about. But with interest rates at these record lows and money being printed at record highs, what are your thoughts on inflation not being a concern at all of the Federal Reserves at this point in time?
Well, there's certainly some reality that you have to face the most pressing danger, right? Like the thing that's closest to you, the thing that can do the most damage in the shortest period of time. And inflation is something that is severely damaging to an economy over the course of decades. And we've certainly seen that. The income and cost of living today, even with all the technological advances we've had, are pretty rough. Everybody's working 40, 50, 60 hours a week. Two-income households can't necessarily provide the same type of benefits to the family as a single-income household could 50 years ago. So inflation is a massive long-term concern. But the problem is we've got very short-term concerns right now. I mean, the unemployment rate is terrifying. And it's affecting everybody. It's affecting my family. It's affecting your family. Tori's talked about his son, and probably all of our clients and listeners out there as well. So I don't think it's an issue of inflation not being a problem. I think it's an issue of they have to focus on other things. And unfortunately, the Federal Reserve has been given the mandate of managing the unemployment rate, which I don't necessarily understand why a Federal Reserve Bank has been given that mandate over the last 20 years, but that is one of their jobs. So, yeah, I think it's a more pressing issue, at least in their minds, but you're robbing Peter to pay Paul at that point. Like, you're doing substantial damage to the kids and grandkids at the expense of easing what our current concerns are.
Well, Miles, while we're on the topic of the white metals, let's hop over to platinum and palladium. Platinum's been strong again. Is this more of this reopening the economy news, as these are much more industrial metals than monetary?
Yeah, platinum really since March, the big fall in March, has just been following this. Take a step up, compress, take a step up, compress. We've done it 3 times now. We're sitting in the same pattern, platinum around 850 this week. So, yeah, I think it's very likely that we could just see that kind of pattern continue. There is an argument to be made that you will see maybe an Elliott wave, 3 drives up, followed by a big correction back down. But the big correction down takes us to, 700 on the low end? I mean, nothing substantial compared to where we started this run in the middle of March. So I think platinum looks very strong right now. I think it's poised to have that big corrective move up. My only concern with platinum is just how quickly it moved 10 years ago. You don't have time to try to catch it. It's like trying to stick your arm out and jump on a moving train. Once it starts moving, it's at least in the 2008 to 2011 market, it was done in like 9 months. And all over. So that's one of my big concerns at this point. Honestly, I don't care what platinum does. I don't care if it's up $100 or down $100. If it's under $1,000, every time I've got money, I want to buy some. I don't care if I buy it $100 higher. It's irrelevant to me. And I'm not waiting to see it $100 lower either. Because when it's $3,500, you're not going to remember, let alone care.
You know, as we're reopening the economy and you hear the news stories of hotspots emerging across the U.S., if we do have another significant outbreak, if you will, that causes the economy to shut down on some level again, do you expect platinum to have that significant drop that it did the first time the economy shut down?
Probably not. I think you'd assume it would do something on the downward side, but you're talking about platinum, palladium, silver, really all the metals except for gold being right down at the cost of production anyway. And there's still going to be some industrial usage going on. Now, it may be diminished by a percentage, but the likelihood that you're going to see substantial drops is probably pretty slim. Because we're still talking about the value of a real asset versus, say, a potential drop in the severely overpriced stock price of certain companies based on where PE ratios are. So for something like that to take a fall, it's completely reasonable. But for an actual commodity, which is already right down near the cost of production level, no, I'm not too worried about that.
And Miles, as we're watching the equities market to kind of determine how the gold price is moving as a hedge or not, the big factor here is the dollar index and what it's been up to lately. What are you seeing develop in the dollar index?
Yeah, I mean, after the U.S. dollar basically fell off the side of a cliff going back through the middle of May into June, we have had a little bit of a bounce. I mean, the dollar broke the 96 mark, or at least the dollar index down to 95.5. We're back up around 97, 97.5, but not too much of a retracement there. I mean, you could see the dollar inch all the way up to, let's say, 99, just on somewhat of a bounce. But realistically, I mean, we just had the inflation discussion. Reality is long-term, the dollar is not and will not be getting any more valuable. So it's not an issue of is the dollar going to get stronger? It really is still which sinking ship has the least amount of holes in it? Is it the dollar? Is it the euro? Is it the renminbi, especially with the conflict that we're seeing this week between China and India, where soldiers were killed on both sides of that conflict? And are we going to see something like that ramp up? this is no longer just about the value of your currency. It's about the value of your currency in comparison to the basket that is compared to. And here in the U.S., it just means that things get more expensive. On a day-to-day basis, we care what the dollar does, not because I care how it's doing compared to the euro. I care how it's doing compared to what I spend at the grocery store.
Well, Miles, real quick before we get out of here, I think we have to touch on the equities market. You mentioned that coming up here in a couple of weeks, we'll be wrapping up the second quarter. We've had a ton of companies already pull their guidance, but we will get some reports, and it's supposed to be some of the worst reports we've seen since the Great Depression from most of the major companies. What have you seen forming up in the weeks leading up to the end of the second quarter in the equities market?
Yeah, markets handle bad news better than they handle surprising news. Surprise is the thing that they always try to avoid, whether it's surprise up or surprise down. Both of those are bad. Markets prefer consistency or at least some understanding of foresight. That's why I like the efficient market hypothesis concept, that all information at all times is always factored into all decisions. So I don't see that with the bad news. I don't see that having as significant an impact as it would if this were March, and this was all hitting for the first time. It'll certainly have negative impact, but it probably won't be as substantial as what we saw earlier this year. I do think what long-term is substantial is some of the other stuff we've talked about. Where's the dollar index going? What's up with unemployment? How do we recover from this? And then, of course, the things that are in the news today anyway. Do we get a second swing of COVID in the fall? The Spanish flu did, where you have your initial spring attack, then things calm down through the summer, and then it comes back even way more powerful 6 months later. Does something like that happen? Do we see increased tensions over in the East between China and India? This could potentially be a big deal.
As well as North and South Korea, right? We've had a building be exploded over there by North Korea this week. And don't forget, on top of all of this, if you remember pre-COVID, this was already a big year because not only the massive amount of debt that we had accumulated as a nation, but we have an election coming in November. So between now and then, it will be nothing but headlines. And don't forget that there's major civil unrest, something like we haven't seen since the 60s taking place right now as well.
So I'd say the theme over the next couple months is going to be don't let the summer doldrums lull you into a false sense of security. In the same breath, obviously, we don't want to approach things with a paranoid or fearful mindset. But sometimes when things are quiet, you can make the most successful decisions at those times. Because like we talked about with platinum, when things move, it's real hard to grab on at that point. And it was the same story with gold over the last couple of years. When gold went from 1,200 to 1,700 very quickly, there were a lot of people just sitting watching it happen. And if you were one of them, hopefully you were already in. So you're watching it with a big smile on your face. If you're not, and you're trying to catch that train passing by, you're missing out because it's real hard to grab on at that point. So we don't want to let ourselves get lulled into that over the next few months.
That's going to do it this week for Golden Rule Radio. If you want to talk to us about your financial portfolio, give us a call at 800-525-9556. You can reach our website at McAlvany.com. Follow us on Twitter at ICA Gold, Facebook McAlvany Financial. That's going to do it for this week. We'll catch you next Wednesday.
Thanks for listening. Have a good week.